I put close to 10% of my life savings into just one company. And it really wasn't an easy move to make, although I don't make moves like this willy-nilly, as you're about to see. The risk to reward looks solid. I got in at a share price of about $211, $211.47. I bought in, I believe, on Monday, June 21st, 2021, and I'm hoping to be able to hold this position for at least 10 plus years, hopefully many decades, and at some point, hopefully it will start paying dividends. And as a small favor for sharing my research today, I'd really appreciate it if you just tap that like button down below as well as subscribe. I really appreciate the support, and it motivates me to share even more of my research. With Alibaba's financial data, I built some useful charts. You'll see a clear picture of the growth potential. There's a lot you can learn when you dig through a company's annual reports. They're pretty long, and since Alibaba is outside the US, it files a 20F instead of the more typical 10K filing. In this video, I've also included a custom discounted cash flow model with price forecasts. But before we get to that, it'd be a mistake not to cover the risk. Too many investors overlook or underweight the potential risk. When it comes to considering any investment, I always ask, why should I not invest in Alibaba stock? Starting out, let's get the market or systematic risk out of the way. The stock market could crash really next week or the next, and that would almost definitely take Alibaba stock down with it. Although this type of risk is unavoidable when it comes to investing. Of course, you can hedge it with puts and other strategies, but that often comes at a hefty premium, one I'm personally not willing to pay. The world's best investors can't time the market, at least consistently. And it's good to keep in mind that there are one-off successes that the media likes to highlight. But this really skews reality, and it isn't the average. To counter systematic downturns, all I have to do is really play the long game. If there's a crash in the near term, it definitely won't feel good seeing red in my portfolio, but those are going to be paper losses and not realized. With history as a guide, the market rebounds. It's pushed to new highs after multiple wars, multiple pandemics, and other crises. I also have an emergency fund, so I'm not going to be forced to liquidate during a downturn. If anything, that's going to give me better buying opportunities. I still have maybe a little too much cash on the sidelines. The elephant in the room when it comes to Alibaba is geopolitical risk. It's a Chinese company. If China and US trade tensions get worse, that could really hurt Alibaba's growth and cash flows, really the fundamentals of the business. The NYSE, or the New York Stock Exchange, could also be forced into delisting Alibaba stock. We've seen this happen recently with a few other Chinese listings. Alibaba trades on the Hong Kong Exchange, but I bought the ADRs, the American Depository Receipts, on the NYSE. The geopolitical risk is definitely one of my largest concerns, and this seems to be a major sticking point for other investors as well. As a result, shares of Alibaba stock look undervalued when compared to US-based tech stocks. And to be honest, this discount is likely going to persist. But with my recent purchase, I clearly believe the geopolitical risk is already well baked into the price. The last major risk I want to highlight is antitrust risk. The CCP, or Communist Party of China, has started to crack down on China's tech giants, similar to what we're seeing from US regulators here. Alibaba was recently slapped with close to a $2.8 billion fine. That's huge, and we'll likely see more litigation costs to the business. And this stifles growth, although antitrust can be a double-edged sword. On top of these risks that I've mentioned, there's also a management risk. We've seen some headlines from founder Jack Ma recently. He's been lying low, or he kind of disappeared for a while, although I'm really not too concerned on that end. The CCP is also treading carefully and doesn't want to knock down companies that really are successes for the country. Alibaba is also facing higher competition risk from JD.com, Pinduoduo, and other players. But this is always an ongoing concern. Nonetheless, Alibaba continues to report impressive growth, as you're about to see. Let's go ahead and jump into the business and the revenue now. The numbers I'm about to share, I decided not to convert from yuan or renminbi to USD. The main reason for this is I'm hopefully holding Baba stock for the very long term, I'm not actively trading it. Instead, the exchange rate is going to matter. I mean, it's still important, but it's going to matter more down the road when I'm actually exiting the position. And I'm not in the business of really trying to forecast Forex changes. Instead, I focus on a company's growth and fundamentals. On top of that, keeping it as the yuan will reduce the chance of errors and keep things a little more consistent. The exchange rates are always moving between reporting periods. And for the current exchange rate, it's roughly 6.5 yuan. I think it's just under 6.5 yuan for every $1. It's changed a bit since I was working in Beijing many years back. Nonetheless, with using yuan as the currency, you'll still see a clear picture of the important trends. Also, when I get to the final valuation, I'll convert it to USD. Alibaba brought in close to 510 billion yuan in fiscal year 2020. That's up 35% from the previous year of about 377 billion. You can see this huge revenue growth in the chart. Alibaba's fiscal year ends in March, so we should have the full 2021 annual numbers soon. Although I couldn't wait and wanted to share this research sooner than later, because I bought so recently. For the first 6 months of the current fiscal year, that's April through September, Alibaba reported revenue of close to 309 billion, and that was up 32% year over year. For one of China's largest companies, this growth is huge. Now, it has slowed down a bit over the past few years, but that's to be expected. And when considering total addressable market, Alibaba still has a lot of room to grow. The company has continued to increase its monthly active users. Over the past year, users have climbed from 721 million to 846 million. That's up 17%. And to put this user base in perspective, China has a population of roughly 1.4 billion people. That's over 4 times the population in the US, which comes in around 330 million. Alibaba is well positioned as the Chinese economy moves forward. China's GDP continues to grow at a higher rate than the US. On top of that, more of its citizens are moving up into the middle class. This should lead to higher sales through Alibaba's e-commerce platforms. Similar to Amazon, Alibaba is also expanding into other high-growth areas. Here's a quick breakdown of Alibaba's revenue by segment in 2020. Cloud computing comes in second with about 40 billion yuan in sales. That's up an amazing 62% year over year. And with the world's insatiable appetite for data and digital content, this segment should continue to grow at a higher rate, even with increasing competition. Expanding beyond core commerce is a smart move, as we've seen with Amazon. And these segments still have a long way to go, especially on the profitability side. But before we get into Alibaba's cash flows, let's go ahead and look at the strong balance sheet. At the end of September 2020, Alibaba reported close to 523 billion yuan in total current assets. And the biggest piece of that pie is cash and cash equivalents. That came in around 302 billion. That's a mountain of cash, and that's followed by about 104 billion in short-term investments. Some smaller line items such as prepayments and receivables make up the rest of total current assets. On the debt side, let's go ahead and pass by current liabilities and instead focus on total liabilities, all short-term and long-term liabilities. This is going to give a better picture of Alibaba's rock-solid balance sheet. Total liabilities come in at 452 billion yuan. So Alibaba easily has enough in current assets to overcome all of its debt. This is a rare position to be in. Very few US companies have this strong of a balance sheet. And to stay competitive or for whatever reason, Alibaba could easily leverage up. Although even then, Alibaba's free cash flows are likely more than enough. Let's start by looking at cash from operations. Since 2016, cash from operations has climbed from about 57 billion to above 180 billion yuan in 2020. That's an annual growth rate of over 30%. Of course, it has slowed down a bit over the past few years, but it's still moving at an impressive clip relative to the size of the entire company. With this 2020 number, we can now work towards finding free cash flow. To do this, we'll first want to subtract CapEx, or the capital expenditures, which has also been growing at a similar rate. For 2020, CapEx came in at about 45 billion yuan. Relative to cash from operations, Alibaba isn't really having to reinvest much to maintain and build its business. And that's great for shareholders. There's lots of cash being generated. All right, from there, we're also going to remove debt payments, which came in around 16 billion yuan. And as mentioned before, Alibaba has a super strong balance sheet with little debt. In most previous years, net debt issuance would have actually added to the free cash flow. Either way, we're left with about 119 billion in free cash flow to equity. For 2021, and based on analyst estimates, free cash flow to equity might come in around 161 billion. That's based on about a 35% growth rate. Now, there was a recent adjustment for Ant Group, and this is just really a simplified valuation model. I'm intentionally leaving out some things, although I am keeping it on the very conservative side. So we'll use 161 billion and project out to 2030 with a decreasing growth rate. I've used 2% for the terminal growth rate, and I'd say that's pretty conservative. I've also used 10% for the discount rate, which is conservative as well, given the current risk-free rate, equity premiums, and other rates considering WACC, all those other things. This gives a total present value of 5,377 billion yuan, or just over 5 trillion yuan. And to get the price per share, we'll have to divide this number by total shares outstanding. It's important to note that the ADRs represent 8 shares, so we can simply take the total shares reported on the 20F and divide by 8, similar to a reverse split. And here's how shares outstanding have changed over the past 5 years. There's a little dilution each year, and this makes sense with some equity compensation. Shares outstanding are moving at a reasonable rate, and eventually Alibaba might start buying back some stock with its growing pile of cash. Either way, we'll just use the 2020 number of 2.7 billion, and the total present value came in at about 5.4 trillion. Divide that by the 2.7 billion shares, and that gives us a per share price value of 1,977 yuan. Now for the last step, let's do a quick conversion to USD. Using a rough exchange rate of $1 to 6.5 yuan gives us a current share price of $304. I bought Alibaba stock at $211. So shares are well undervalued based on these estimates and projections. To go one step further, here are some quick ranges when adjusting the terminal growth and the discount rate. Some quick sensitivity or scenario analysis. There are many ways you can slice and dice company valuations with many assumptions. I used to create much more complex models, although I've learned that more complexity doesn't usually lead to better forecasts and outcomes. Instead, it tends to make analysts more confident or overconfident in their projections, which isn't good if accuracy doesn't increase as well. Still, this process is good to get a general idea of what a company is worth relative to its current market cap or share price. I highly recommend reading through Alibaba's 20F to get a better understanding of the business. Overall, I feel the risk to reward is solid with my recent investment in Alibaba stock. Although, as I emphasized earlier, this is by no means a risk-free position. Things might not work out, and please do your own research if you decide to invest. Also, the 2021 numbers are coming out soon, so I might update my forecast. Once again, I'd really appreciate it if you just tap that like button down below, as well as subscribe, and please let me know if you have any comments or questions whatsoever. I'm usually pretty responsive.